Silver's unleashed. Expect something extremely dramatic between now and the second quarter of this year. It comes up to much bigger numbers than merely going to 100 to double the range. There's another argument for 500, by the way. Silver in 21 of those 50 years that we've had has at least been 2% of the price of an ounce of gold, minimum. And in bull trends, like 79 to 80, or we're in a bull trend now, right? Okay. Yeah. Or in 2010 and 11, silver was 3% or more the price of gold. So right now at 1.125, silver is very cheap relative to gold. But it's technicals of that spread relationship. And we study it, the week by week, month by month, and we run momentum of the spread. Momentum is now breaking out. It's telling us the spread itself that is rising, favoring silver since the beginning of the year, or especially since April, by the way. No, since April, sharply. It still hasn't broken out on the spread, but the spread, you get above 1.31% to get bean counting for you. Yeah. And we're headed toward that level. You're going to blow out a 3-year high on the spread, in which case you're going to rush. We're at that cusp right now, where if you go through that level that I just mentioned, and 1. We're nearing, 1.31, you get above that, there's a vacuum between you and 2%. And that's not necessarily resistance. That's just a level we've been at 20 of the past 50 years, okay? So it's hardly exciting to get there. Yeah. But that is enormous. But when you look at silver, I know a lot of people treat it as an industrial metal. And yes, it is, okay? And it's got a supply-demand deficit, and that's helping drive it. But it's also money. Don't forget, historically, it's baby to gold. Yeah. And gold hasn't been restrained in a 50-year range. You look at its bull peaks, 1980 when silver hit 50. 2011, gold was $1,900, well above the 850 high, 1980. While silver was still at $50. Yeah. So what's going on? Silver's unleashed. Some other markets have done this type of go to a new reality event. Even copper. It lived in a price range that was dull for decades, between 50 cents a pound and $1.50. You go back to the 70s, 80s, 90s, 2000, about 2005, late that year, it punched up through the top of that bull price reality, and it quadrupled in a couple quarters. And there was no specific event that did that. Lead, another exciting metal, had been in the same kind of price range that it's an inhale exhale for half a century almost. Yeah. And in 2007, well after copper did its thing, lead broke out of the similar price pattern and quadrupled in a couple quarters. And then once it did that, there was a sell-off after that move, but it lived in a new average price reality that was quadruple the price level of the prevailing multi-decade range.
Michael Oliver warns silver is entering a new reality, breaking its 50-year $50 cap. His momentum analysis targets $500 silver as it seeks a proper ratio with $8,500 gold. Miners are at a historic breakout poised to double from 8% to 25% of gold's value. This is not a normal bull market, but a systemic tantrum that will climax rapidly by Q2 2026. The coming bond market panic and dollar collapse will force endless printing, accelerating metals into a permanent new monetary role.
I expect the spread to go a lot higher than merely 2%. 2%, by the way, meaning divide an ounce of silver into an ounce of gold, express it as a percent. Most people do the ratio. We do it the other way. Yep. 2% it happens to be so common that in 50 years of silver history, it's been at 2% of the price of gold in 20 of those 50 years. So it's not like a big event. It's like, oh, hum. Okay.
It's not expensive.
Yeah, and now it's not expensive. It's not even necessarily a bull market to get to 2%. In the bull years, which is 79 to 80, that actually been going up for years prior to that, but in that phase, it got well over 6%, 6.5%. Okay, and then in 2010 and 11, after years of advance, the spread shot up to 3.1%. Okay, we're just above 2% right now. Okay. You could go to 3% just to match the lesser of those two bull market peaks of the last 50 years in terms of the spread. 3%. Wow. And gold's not going to sit still while silver goes up, by the way. So the spread doesn't work that way. Whenever that spread breaks out, you go back in history, you'll see gold was exploding too. It's just that silver was more parabolic. And any technician would look at that arithmetic scale, $4 to 50 and back down under 10 again, then back to 50. So you got like a range that involves $45 roughly. Okay.
Yeah.
If you add that to that range, orthodox breakout, it says $95 to 100 maybe. Okay. You'll notice we had a fight in the mid-90s a week or so ago. It was for several days, a lot of selling there. So I knew that crowd would come in somewhere, around 100 because they did their math. Okay. And so I'm very appreciative of the attempt to sell it there. I cheered it because that told me these guys are playing the game of arithmetic swing move. We're going to have a normal bull market. Yeah. And I don't think they know what they're dealing with.
And I mean, there's arguments there. I think we spoke about that in October. I mean, adjusted for inflation, silver needs to go, depending on your measurement, to $150 to $200 just to match the 1980 high.
It could go to 500 if it matched 1980. I'm looking at the comparisons to gold, for one thing. We're still undervalued. Okay. At least go to 3.1 to match the 2011 peak. Heck, we blew out that price high. Why not challenge the spread? Maybe challenge the 6%. And then when you look at gold, the mama metal, monetary metal, and look at the two prior bull moves, we're still early on that clock. The spread broke out, and how many months? Usually it's a couple quarters. The other instance was in 2010 to 11, a similar spread breakout for silver gold. And then silver launched. Okay.
Silver and gold, like the breakout is going to happen quickly. Is that just because historically, when it kind of goes through that level, it always happens pretty quickly?
And plus it's at a low level. In other words, you're looking at a metal that historically, when it was near it was below 1% actually early this year. When you look at that historically, go back 50 years, I mean, you think it's going to zero? You buy cheap, okay, but you needed a technical signal to buy because it's been cheap for a while. We're arguing that there's likely to be, in the middle of this couple quarter explosion in silver to a new reality, a month, or a handful of weeks at least, probably a month, where it feels bad, where you get a reversal, where you get what looks like a top to every guy out there who's been yelling top all the way up. Finally they'll get one that will look more like one. They thought it was a top the other day too.
Yesterday, 117.
2 weeks ago it was a top, and a month ago. But there is a level, and I don't have it defined yet. I've got some parameters I'm looking at, MSA is looking at, that could suggest, okay, we're now at certain levels on these indicators that suggest be careful of a midpoint fake out false correction. I suspect, and this is ballpark, so don't act on it. Our reports will try to get as specific as we can, and maybe we'll miss it. But I think somewhere probably later in February, maybe early March, there will be that wobble. And that's where, especially, now if you're an investor, forget it. Don't get out. If you own bullion or miners outright, you're not leveraged. But if you own like call options, or especially of futures or double long silver ETFs, you might want to get cautious and protect. Partial protection, not all. Don't get out of the market. In fact, if you go back and look at the 79 to 80, summer 79 to 80, or look from September 2010 through April 2011, where silver went parabolic in price, there was in the middle of both of those, roughly in the middle of the clock, the 79 to 80 was 5 months surge. The other one was 7 months surge. So either side are 2 quarters. But right in the middle of both of those, there was, in fact, a month that looked like, oh, gosh, that's it. Yeah. And it was a total fake out. And it marked the middle of the clock, but it didn't mark the middle of the price move. Because what occurred on the other side of that, once the fake out breakdown reversed and took off again, was more on the upside than what preceded. Well, see, that situation is just beginning. It's sort of like the silver versus spread relationship, where all these things have been going up for years. Miners, gold, silver. They've recently changed the dimensionality and the tone. Okay. Silver changed because its spread broke out versus gold back, late last year. And bang, bang, bang. All of a sudden, the spread exploded, but also silver went off the page compared to gold. Okay. The miners have been, after that collapse that was signaled in September 2008, the spread at that breakage point was about 17%, meaning you've just blown out all those lows of that Okay.
Yeah.
It is slightly lessening up on call options at this point and moving straight into miners.
Okay.
And SIL, for example, the mining ETF, which is silver miners.
Yeah.
But also buying a lot of junior miners and so forth outright. And I've got like a dozen to 15 mining stocks, including 4 of the biggies.
Yeah.
So I'm starting to shift more into the miners because my assumption is that breakout's coming. You're not going to stay in the box. Silver did it. Miners are going to do it too. And they're dancing either side of that number. And if you do, that spread relationship says, I got no resistance above me until, heck, I go back to the old floor.
25.
No,
So,
no,
Michael,
no, that's the average. I'll take the floor. This floor was 17 to 18%. You're at 8 something. That's more than a doubling. More than a doubling.
Wow. Let's talk about this. Let's talk about this because the miners have had a huge move, right? The GDX is up, whatever, it's up 200, 300% in the last
more
year.
More than gold over the last year or so, yeah. Mm-hmm. Yeah.
But I love this because we're back in the spread world, which is your world. So they're at about 8% right now to the XAU. And
the XAU is about 8% plus 8.6 approximately versus gold price.
That's what I mean. Sorry.
Okay.
That's what I mean.
The reason I use XAU is it's both gold and silver miners, but it goes back to the 1980s, so it has a history. GDX only went back to 2006, for example. But anyway, that spread chart's breaking out, trying to this month. And it's tried a couple times before, so this probably is going to work. It's been multiple hits. And if it does, it says game just started. That's a fresh breakout.
You gave us the exact spread. 1.31 is like burned into my brain for the rest of my life. What is that number for the miners?
Well, 8.62, like to close a month above that number. And we've been trading above it on and off this week. And we got 3 days left. Let's see. Now, if it doesn't do it this month, I'm betting it still does it like next month. Because
you divide the price of XAU by the price of gold.
Just take the XAU and divide it into gold. Yeah.
XAU divided into gold. Got it.
The end of the month, the closing Friday, in other words.
Okay.
And right now it's at breakout levels, but you never know. It might be just below, just above. Now, if it doesn't this month, don't assume it's going to fail, because when you see this pattern develop with so many hits to the top of the structure, it's so clear. It's showing intent. And also, put it into context. I mean, everybody wants gold now. Not everybody, but a lot of people do. And they suddenly realize they need silver, but the miners are going to stay cheap. I mean, even 8% is like, compared to an average price of 25%, I mean, it's off the page cheap. And that will surprise people because, for the fear factor that you mentioned, if the stock market rolls over, we're in an opposite technical situation now, and cheap, just like silver was to gold early this year, 1%, So pay attention to that. And
Incredible.
It's fresh, meaning if that breakout occurs, it's saying something's not about to end. It's just beginning.